Hi students, we're going to talk about investment analysis, and I am Yusuf Bonaparte. I'm the director for externals, CU Denver professor. Here are the outline of the lecture. We're going to talk about stock asset classes, market status, buy and hold, some technical analysis, investor positions. I also mentioned some crypto just to make a comparison between stocks and crypto. What's the difference between investing and trading? The key difference is the time horizon. Investing, if you're an investor, your time horizon is very long, 5 to 10 years, or at least a year. If you're a trader, is narrow and short time horizon, could be a few minutes, could be hours, could be days. To be an excellent investor, you have to follow 3 steps. Focus on the innovation. Focus on stocks that has a lot of innovation. Diversification, make sure that you diversify across companies and across sector. Not all this investment in the tech sector and Apple, Amazon, Microsoft, just because we hear about them a lot. And cut your losses. If you see a company not innovative, not doing well, you have to sell it and claim your tax return. Crypto tech asset class, which as I mentioned, different asset class. The difference is crypto is very volatile, number one. Number two, because there is no regulation, there are only retail investors. So there are 2 types of investors, retail and institutional. Institutional like JP Morgan, Morgan Stanley, Janus Henderson, and others. But retail is us, me, you, and all small people, small companies. So crypto are more invested by people investing in crypto are retail, not institutional, because of regulation. And as a result, there's a lot of volatility in a crypto asset class. If you look to the figure, the crypto is a dark line, and you can see it's very volatile, whereas the S&P is a lighter blue, and it's a flat. It's going up, but not that much. Market timing. The market opened at 9:30 Eastern, which is 7:30 Mountain Time, till 4 o'clock Eastern, which is 2 o'clock our time. The first half of the market prices, like from in the morning, the first few hours in the morning when the market opened, try to price in news and information of yesterday or a day before. And then institutional investors join the market, and the market for the last 4 hours of the session, they started pricing the tomorrow information. For example, if Amazon have a very good earning today, and tomorrow Apple will have earning announcement. If Amazon have a very good earning announcement last night, so the stock market start opening green, high. But if investors thinking Apple is going to have a bad earning tomorrow, or there is labor market report and people think it's going to be bad, then the market after a few hours start going down. So the market price in the morning, previous information, and the rest of the day of the session, the market price, the tomorrow news. Usually retail investors are in the morning, institutional investors join later in the day, but don't trade against institutional investors. If the institutional investors go in long position, like buy, definitely the market is going to go with their way. Here is some ideas about buy and hold strategy, advantage, disadvantage. Advantages, you go, the volatility in the market doesn't hurt you. If you buy and hold, the volatility doesn't hurt you. If you buy now and you want to cash in 20 years, so if the market going up and down, it doesn't matter. So, and you need to spend time in the market. The disadvantage, you're always exposed to the market risk. Therefore, my recommendation to my clients and all of the people I work on, my students and this class students, is dollar cost average, which means suppose you have 100,000, you want to invest them all in the market. Wrong. What you do, you invest in 100,000, you invest 10,000 every 2 months. Like every month or two, you invest some of your cash. So overall, a year, you will move all of your money for different prices in the market. If the market going up and you bought and continue up, good. If the market was up and you bought and the market went down, don't worry, because next month you're going to invest again. So we call this dollar cost average. Market status, there are 4 states: correction market, bear market, bull market, and sideways market. Let me start with the bear market. Bear market, if the stock market going down 20% or more, 20% or more from all-time high, that means we are in the bear market. For example, if the S&P was all-time high, $100 a share, went down below 80, that means that's a bear market. Bull market, if it's below 10. If the S&P was 100 and now it's 95, 93, 91, still a bull market. If the S&P going 10% or more, like it was 100 all-time high and become to be between 90 and 80, that means that's a correction. Sideways economy market means the market going up and going down, going up. So it's a flat for a long time. And actually, we have a kind of sideways these days. If you go to Yahoo Finance and look to the S&P, if you look at the S&P in the past year, it's a sideways actually. Up, down, up, down, up, down, up, down, but it's a flat basically, the S&P. So that's, we call it sideways economy market. Key financial indexes. There are 3 main indexes. There are many indexes. The 3 main one is the Dow, it's old America, banks, retail, oil companies, steel, airlines, that's old America, we call it. The Nasdaq is the new America, which is stocks or companies. This index very heavy weighted the tech companies. The S&P, we call it all America because it includes all the companies without any overweight over companies. Here are some issues of difficulties to implement investment. Is one of these is fundamental versus technical indicators. Some indicators are fundamental, showing the economy is bad, but the technical indicators showing what's a good time to buy. So there are some difficulties: investment style, level of portfolio leverage, level of risk tolerance in the portfolio. Market cap. When we say market cap, we're talking about the value of the company, which is the price of the company multiplied by the number of shares. Stock market volume, it's a number of shares of the company price multiplied by the shares that are sold. So if you go to Yahoo Finance, let's go Apple, for example, AAPL. So the market cap for Apple is 2.4 trillion, which is the number of shares Apple multiplied by, this is the price of a share multiplied by number of shares. So shares outstanding, something like that. This number multiplied by the price. And then volume for Apple, average volume $72 million. Today was 73, above average volume. So the volume is the price multiplied by the number of shares sold today. Now I'm going to go through some technical analysis. Support. Support means the price doesn't go below something. So go up every time going down, but below something cannot. There is a psychological price that people don't want to sell below that price. That's a support. Resistance, the price going up and then all they go going down. Every time hit the ceiling, going down. So we call this resistance from the top. So trend, there is support and resistance. Here you can see that the price support is linear, going up. But there is a support, but it's not flat. This was flat. It could be also increasing with support. And resistance also can be like this. Here's an example of support and resistance with the variance dynamic. This is support and resistance without variance dynamic. Price breakout. So sometimes you're between resistance and support, but sometimes there's a breakout. That means you've been for a while between support and resistance, and all of a sudden the price breakout. How to distinguish between breakout and support and resistance? How could you know this time it's going up. The way to see it from the volume. During the period when it was between resistance and support, the volume was low, but now the volume went up, 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 up. That means this is a breakout. Now I'm going to talk about candle and then pretty much done, and then Q&A. There are candle here. This is a part of the candle. This is open. This is a close price, for example. If you go to Yahoo Finance, and here you can see the price of Apple. And now you want to do it line or you want to do it candle. Here are the candles. 1-day candles. You can do 5 years. You can see the candles in 5 years. So these are the candles that we work with. In the bottom, you can see you want to see 5 years maximum, 1 year, year to end. So this is a candle. There's a beginning and there's an end. Beginning of the candle, like every 5 minutes, and the end of the candle. Beginning of the candle, end of the candle. So open and close when the price will open and close. If the close higher than the open, that will be green. If the close lower than the open, that will be red candle. So for example, this is green because the price at the beginning of the interval of time, the price was low, went up high. Here, the price was high and then after a few minutes went down. So that's a red candle. Red candle, that means during this term time slot, the price went down. Green candle, the price went. Green candle, that means the price close of the candle is higher than the beginning of the candle. And here I explained that the definition of candle. So now there are a lot of candle formation. There's a hammers, shooting bars, and doji candles. These are the most famous candle. From this, you can do trading strategy, and we're going to have a lecture about trading strategy. This occurs when there is an initial drop in the price, and then buyers come and then bring down candle up to the positive territory. These formations are considered bullish. So this is the hammer. Green and then 2 reds and then green, green, green. Red, red, and green, green, green. That's inverse hammer. So these are bullish patterns. These are a bearish. That means the market is going to go down pattern. Moving average. You will have a lecture about moving average. I'll go through it quickly. Moving average, that means the price is moving a lot up and down. Let's go to Apple, for example. So the price of Apple is up and down. So you can do moving average. 50 days moving average. So now you can see the price is more flat, more smooth. So the moving average is smoothing the price of Apple. It's to be like this, up and down, up and down, up and down. Here you can see like the price is smoother. And there's a reason why we want it to be smoother. We explain that later when we talk about golden cross. Moving average, here is example how to calculate the moving average. Why we need the moving average type indicator? Because it helps us to know the short term and the long term, how the price is going. If the short term going faster than the long term moving average, then it's a buy stocks. And I'll explain it later when I go to the golden cross. Different type of moving average. There's exponential, weighted moving average, simple moving average. And there's a hard moving average also. Now, what is the optimal weight of crypto in a portfolio? Recently, a lot of companies try to have crypto to the portfolio. This is the way we construct portfolio. WN multiplied by RN. like maximum return for a given risk. And then what you do the same problem, but you add what you add is WC RNC. Which is the return in crypto multiplied by the weight of crypto, and then you have to add another one here, which is WC. Now I teach a class about crypto, and this is the model we use to know how much to optimize if you're an investor. And a lot of people ask about that, how to optimize the crypto in the portfolio in the stock market. So this is pretty much a mathematical model. RC is the return in crypto, and WC is the weight of crypto. Here's our more formation of candle. So when I talk about trading strategy, you can use this to understand which one is a bear market. That's a bull. That means bear, 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 bear. And here are other financial indicators: moving average, relative strength, RSI, and others. Finally, you have these questions. I want you to answer this question in Canvas in the tab. So you have opportunity to answer there. So answer that question. Be short and sweet. You didn't need to be very long. Thank you so much. And I finished today's lecture about investment analysis. Thank you.